QuickBooks defines a vendor as anyone you pay money to, excluding your employees, such as the utility company, your suppliers, and the tax board. QuickBooks makes it easy to add new vendors using the Vendor Center. To open the Vendor Center, click Vendor Center. Now let's go through the process of setting up a new vendor. Click New Vendor. We'll enter the vendor's name, East Bayshore Tool and Supply. Once you've entered the vendor name, you can then enter all the details you want recorded for this vendor, such as address and contact information, plus terms, credit limit, and if the vendor is eligible for a 1099 form. Of course, you can decide how much detail you want to enter. Sometimes you might want to enter only the vendor's contact information. You can also enter your current balance with the vendor in the opening balance field, but instead of entering the vendor's opening balance here as a lump sum, we recommend that you enter each outstanding bill individually so that you can track your expenses at a higher level of detail. For example, if you have 2 unpaid bills for supplies from East Bayshore Tool and Supply during the past 2 months, we suggest that you enter each unpaid bill individually. By entering bills individually, you can see that of those $280, $175 is for equipment rental and $105 is for tools and miscellaneous equipment. Once you've entered a vendor's information, it can be reused for each payment or communication with that vendor. Each time you enter a new order or payment to an existing vendor, select the vendor's name from the list. QuickBooks fills in the related information about the vendor, such as payment terms and due date. That's it. You've learned how to set up a vendor and the vendor's opening balance. To learn more about QuickBooks, go back to the Learning Center and select another tutorial from the list.